Good morning and welcome to AusBiz Live. I'm Nadine Blaney. This is the Global View for Tuesday, January the 13th. And well, what a session on Wall Street. Equity investors mostly looked through the turmoil surrounding Trump and the Federal Reserve Chair Jerome Powell. But they did wax and wane, initially opening lower, but closing at new record heights for the S&P and the Dow. The Nasdaq, though, did lead the gains. Caution was evident after the U.S. President's Justice Department threat to indict Fed Chair Jerome Powell over his congressional testimony on a building renovation project. Powell called the move a pretext to gain more influence over interest rates. Many of Trump's own party politicians fear the probe undermines Fed independence, with even some Republicans planning to block Trump's Fed nominees. Gold miners surged as the precious metal breached 4,600 per ounce for the first time. Newmont and Barrick mining climbed, and so we're expecting to see the same here in Australia. In other news, though, financials underperformed as the U.S. president called for a one-year cap on credit card interest rates at 10%. Shares in the credit card providers obviously fell, but it also hit BNPL providers, despite some analysts saying the move by the U.S. president, if it does come to fruition, could push people toward alternative lenders like BNPL. In AI news, Apple will use Google's Gemini models for its revamped Siri, which is coming later this year. It's part of a multi-year deal that deepens the alliance between the two in terms of AI and also helps to bolster Alphabet against its rival, OpenAI. And in other big corporate news, Paramount Skydance sued Warner Brothers Discovery for more information on a rival $82.7 billion deal with Netflix, escalating a battle to take control of the Hollywood studio. Quarterly earnings season starts in earnest tonight. Consensus is for earnings growth of 7% year on year for the quarter versus 13% in the third quarter. But most of that growth is expected to come from, you guessed it, technology and the Mag 7. Bank of America strategist points to the rare fact that there have been no downward revisions to S&P 500 EPS in the 3 months leading up to this quarterly reporting season. So the U.S. dollar fell as Fed independence was called into question. Sterling rallied against the U.S. dollar alongside the euro and Swiss franc. The Aussie dollar extended yesterday's gains. U.S. Treasury yields were little changed, retreating from earlier highs. The 10-year edged up 0.6 basis points. And to Europe briefly, the Eurozone Centix Investor Morale Index rose more than expected to start the year, hitting its highest level, in fact, since July of last year. Still, though, as you can see, it does remain in negative territory. We'll be watching lithium stocks today. Prices soared in China yesterday after Beijing said it would roll back tax export rebates. Oil prices held near a 5-week high. So really balancing the supply-demand concerns between the crackdown on anti-government demonstrations in Iran, offsetting potentially increased supply coming from Venezuela. Here's a look at that record gold price, above 4,600 per ounce. Silver also reaching a peak as investors piled into safe haven assets. Let's make sense of it all. Steve Sosnick from Interactive Brokers joins me now. Steve, lovely to see you. Please do make sense of those record finishes for the S&P 500 and the Dow last night.
Oh, good morning, Nadine. I think basically this is another sign of a few things that have been going on for some time. Number one, investors just see every dip as a buying opportunity, and so we opened lower, and then the lack of follow through selling meant that there were more buyers coming back in once that first wave of selling abated. Also, I guess at some point, we've just become sort of inured to all the crazy news. I mean, when you think about what came out just between Friday afternoon and this morning, speaking our time, right? You had the president calling all the oil companies into the Oval Office, and at least two of them said, no, we're not really eager to spend billions of dollars in Venezuela without any real assurances. Then you had this idea that that no credit card company can charge more than 10%, and he's going to enforce a rule starting on the 20th. Despite the fact that there really is no legal basis for such a thing. Then he went after Chairman Powell, threatening the Fed independence. Any one of these things should sort of shake the market and cause people to question whether the government is sort of intervening in private enterprise in a way that seems, rather unprecedented. But the momentum just keeps winning. Momentum continues to win out.
Yeah, so that was what we kept saying in 2025. What could derail it? I mean, if none of the aforementioned were enough to even give it a wobble, I mean, when you consider the closing record highs, like what will it take to smash this momentum? Could there be something in this upcoming quarterly earnings season?
Couple things. Well, first of all, the fact that there were no earnings downgrades is actually, in many ways, to me, a little bit scary in some sense. You have to climb the wall of worry, and if you run out of worries, well, then you don't really have much of a wall to climb. And I think in the case of earnings season, if everybody's expecting earnings to be gangbusters because we haven't had reason to doubt them, well, then that means the market set a very high bar for itself. So that in itself, is sort of topsy-turvy logic, but that often proves to be the case. If expectations get set too high around earnings, they can disappoint. Furthermore, just I think at some point, you do start to get the sense here that things are unraveling in a strange way regarding the government and businesses at some point where you're starting to see senators actually rebel against the administration in a very modest way, but actually, you alluded to, the senator from North Carolina who said he's going to block any Fed appointments that the president makes. He's on the banking committee, so he has some ability to throw sand in the gears. Senator from Alaska making noise that she's very unhappy with what's going on and she's going to take some action against it. So this is a little unprecedented for us. And I do think as we get into a bit more of, the election mode, because remember, here elections take years to resolve themselves. So November is just around the corner from an electoral point of view. I think that's the sort of stuff that can give the markets pause. And I just think at some point, I think we tire of the interventionism. But as of now, barring any catalyst, nobody wants to be the first one to sell.
Okay. Now, when you think about tariffs and how they are now being considered, washing through the systems, whatever you would like to call it, we do have an inflation read tonight that's hugely important. What are you expecting, Steve?
I would say that the market's pricing in called about a 75-80% chance that the tariffs largely get overturned. There was some hope that they would come out on Friday. They didn't. The market had a bit of a knee-jerk reaction to the downside when the news didn't arrive, and that was the latest, the second to latest in a series of perceived buying opportunities. It could come as early as Wednesday our time. I think part of the issue is not only are they upheld or not, but also what are the remedies. I'm guessing that the Supreme Court will be loath to order rebates on all the tariffs, just basically to say, all right, sorry, federal government, you got to pay back all the stuff that you took. I'm guessing that's going to be negotiated. That's going to be argued in civil courts for however full employment for lawyers in that regard. And then I think there are some levers that the administration can pull. I think the problem here is that the government was banking on the fact that they could use these emergency declarations to declare all these tariffs, and it's unlikely the Supreme Court will abide by that emergency declaration 100%. So how do they split the baby, I think really becomes more the question. And I think that there will be, it strikes me as one of these things that nobody's going to be fully happy about the result, based on how I think the only logical ways that the Supreme Court can come down on this.
Yeah, well, again, Steve, to your first point, I suppose you're getting used to that over there, aren't you? But that inflation read tonight, do you think that could upset market? I mean, that would only happen, I suppose, if it comes in higher than expected.
It would have to be a pretty hot report. And the reason being, for January, the markets are only pricing in about a 5% chance of a rate cut. So, the next FOMC meeting is the 28th. It's pretty much priced out. At this point, we've pretty much largely priced out rate cuts through April. There'll be three, April is the third meeting. There's one, I forget if it's February or March based on the calendar, but then there's one April, and then the next one is June. We're pretty much at about 50-50 that there would be a cut even before April. So really, I think it's up to the next Fed chair since Powell's term expires in May. And I do think part of the drama surrounding the president's, the Justice Department's actions on toward Powell, the president sort of disavowed knowledge of them, which I find hard to believe. But Powell actually has the ability to stay on as a governor for till 2028. It's typical for Fed chairs to resign all their posts when their chairmanship ends. Although I suspect here that part of this is sort of a shot across the bow toward Powell to get him to leave. And so I think even with the new Fed chair, who will almost undoubtedly be more receptive to the president's calls for lower rates, I think you may still get some pushback there. So a hot number will upset the market. Too much inflation is never good. But I think if it's more or less in line, it's pretty limited as to how much it can move markets in a positive way. So it's to me, it's sort of a one-tailed number, although never underestimates the market's ability to turn these into good numbers if it wants to.
Yeah, right. Okay, so just a final parting thought for Aussie investors, perhaps getting a little bit nervous looking at their U.S. equity exposure. What and how do you exercise caution at a time like this?
I think diversify internationally. One thing would be if you're Australian and you're already heavily invested in the U.S., there's a whole great big rest of the world out there besides our two countries. A lot of the performance is coming from other places right now. That's one way to do it. I do think that yields seem to be finding their level. We're not expecting too many more rate cuts internationally, so it's not as punitive to put money into cash right now. I think just in general, also what we're seeing in the U.S. overall is a move away specifically from this love of tech stocks. We've been so enamored with tech stocks since the December GDP report. We've seen a lot more of a move into cyclicals, other economically sensitive sectors. And so I think, thinking globally in those terms, if you do believe in the sense that there's, economic strength to be found globally, I think a little more defensive trades, whether it's in the U.S., whether it's in Australia, or whether it's in a third country, those start to pick up some appeal.
Well, Steve Sosnick, it's always nice to have a chance to speak with you. Thanks for joining us.
My pleasure, Nadine. Talk soon.
Take care. From Interactive Brokers, he's live there just outside of New York. Pretty extraordinary times we're in, but what it means for our local market is for the second day in the row, we're expecting to see it open higher, and in no small part due to the commodities complex. Iron ore was actually down overnight, but gold, silver hitting those record highs. We'll also be keeping our eye on lithium. As I mentioned earlier on, prices in China were higher. Bit of news out in terms of a commodity-focused company being Lynas. Long-serving CEO Amanda Lacaze is stepping down. I'll actually be speaking about Lynas in the next hour with Paradise Investment Management. I do hope you can join us for that.